Hi everyone and welcome to today's morning report on Friday the 15th of January with me, Richard Perry, market analyst at Hantech Markets. We've had a fairly sort of neutral-ish start to the European session, but that's just started to shift back lower again. You have got a sort of a continuation of this safe haven trading in the market. And that's sort of despite the fact that we've had a very strong session actually on the S&P 500 into the close, but the Asian markets were reacted lower. Or slightly lower anyway, in the fact that we had some weak data again out of China, the new yuan loans, which is effectively bank lending into the economy. They came in drastically under expectations and also cutting the money supply as well. So what we've seen is safe haven trades performing much better again. Not only that, we had yesterday comments from James Bullard, the St. Louis Fed president, who is now a voting member of the FOMC. He sort of came out. He was actually one of the more hawkish members of the FOMC, and came out yesterday saying that this continuing decline in oil price is a big problem and could impact on monetary policy. So that could impact on the expectations of future rate hikes, or certainly in 2016, or these four rate hikes that that the FOMC seems to think it's going to be doing. And you can see here with the 2-year yield actually back below levels that it was in December before the rate hike, and back to November lows. The 10-year also continues to fall away. Again, that's back to 2.5, 3-month lows as well. So some real safe haven moves that we're seeing. Not only that, you've got oil price that's now, just as I speak, pretty much fallen below that $30 a barrel mark. 4.5, 5% lower on the day as we speak. So it's just it just doesn't want to show any signs of stopping at the moment. This oil price, it's very, very negative, and again breaking lower today. So pretty much across the board on forex markets, we're seeing safe haven moves, seeing euro strength, yen strength, and the commodity currencies all lower. And it's just beginning to now come through the equities markets as well. Obviously, with perhaps they've been a bit late to wake up this morning, the equity markets in the European session, but certainly this safe haven moves in forex and also bond markets should theoretically show through in the equity markets in terms of weakness. So what have we got to look forward to today? Well, we've got actually quite a lot of US data actually. Just starting at 1:30, we've got the retail sales. Sorry, where is retail sales? There we go. Retail sales at 1:30, actually expected to come in at plus 0.2%. So that's slightly improving actually on the year-on-year data to 1.7. So actually a slight pickup in that, but you've also got the New York Fed manufacturing, or the Empire State manufacturing data. Now this has been negative for the past 5 months. It's forecast to come in again negative 4.0. This is an indicator that certainly reflects the manufacturing problems that the states have got at the moment in the fact that across the board pretty much all the manufacturing industrial data is negative. Then we're going to get the industrial production numbers. Again, another set of numbers that is forecast to come in negative, down by negative 0.2% on the month, and that's expected to drag the year-on-year data lower again. So again, the industrial production data is negative, or the expectation is expected to be negative. And the capacity utilization continues to drop. That is expected to come in at 76.8. That is the lowest since January 2014, so a 2-year low there. That would be on the capacity utilization. So that again is a negative sign. Now you sort of end the data stream from the US today with the Michigan sentiment expected to come in at 93.0, which is up from a revised 92.6 from last month. So a bit of a dichotomy still between the consumer data and the industrial data in the States. So that's could well mean that we've got a bit of a choppy afternoon ahead, but my chance of the day is the euro yen. Euro yen has been in this big downtrend channel. I've been talking about this big downtrend channel for the last sort of few months really. It's been in this trend channel, it's been back towards the lows of this channel and now consolidating. But you can see here that let me just get my crosshair going, on the 7th of January, We actually had a bullish key one day reversal or a bullish engulfing candle on this pattern, and that's has that the legacy of that chart pattern has held. That low coming in at 26.75, and that's held, and the consolidation has been ongoing now. But what we do have is sort of slight improvements in these momentum indicators. We've had the RSI crossing back above 30 and holding up. We've got the stochastics having crossed over and holding up. We've got the MACD histogram, which is these little bars here, which show the distance between the MACD lines. They are improving as well. So that if those MACD histogram lines turn higher, that signifies a crossover. So we could be close to the MACD lines giving us a crossover. So we could be close, as this consolidation is going, to a bit of a recovery. Now, in terms of the levels that we need to look out for, well, certainly you need to hold on to this support at 127.28. 127.30 really I'd call that, which is your sort of reaction low within this pattern. What you'd ideally be doing is sort of moving up to challenging that 129.10 area. Now you do have moving averages on the hourly chart, which are now sort of turning at the very least neutral. And you've got a slightly positive bias in the momentum indicators as well. So I would take it that this is just gradually an improving chart. Now you take that or sort of equate that across the market. I think the yen is the ultimate safe haven trade. Euro is slightly less of a safe haven trade, but still is a safe haven. But if the euro is starting to gain against the yen, is that a sign that the market is beginning to sort of turn around in its sentiment? It's an interesting concept, but we'll see how this one pans out. But at the moment, the euro yen is sort of trading sideways between this sort of 200 pip band, and is fairly settled within that. But I wish you good luck in your trading, and I'll speak to you later. I think.